Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up, and this is for Thursday, the 11th of February, 2021, about 6:10 p.m. Central Time. So we're flat to a bit higher in the metal markets. The platinum's down the most, but the copper still here. But the copper, as I said, it's having trouble at the 380 level. The gold market just sort of stuck against the 18-day average, give or take. You'll see it in a moment here. The silver market trying to hold on. The dollar had a rally today. Not a good one, just a bit of a rally, and most of the currencies waffling here. You tried a good break in the stock indices. They came back late in the day, and we're starting to roll to the right-hand side, as I told you, from the upper Bollinger Band on the energy market. So let's take a look, if we could, at gold. Gold is maintaining a downside bias. I know all the inflation talk and everything everyone says, but until you're going to have a lasting bull market, you got to get over the 18-week average of closes. Without that, the bias of the market, as I define it at least, is to the downside. And I define bias as when the market closes under the 18-week, it's down. Over it, it's up. When the market is down a good amount, often if we get a rally, it tries to fail or figure out what to do at that 18-day average, be it if you were on the upside and coming down or the other way. And remember, this is a close-only chart. Then we take a look at the daily chart. And as we saw, the market had broken down last week into this week. We've had a bounce back into the resistance that I was pinpointing for you. That whole zone is it right now. You can see that the pattern of the chart turned bearish again now. With today, that is Thursday's action, we're already looking at Friday's trade. You now have a pattern of lower highs and lower lows, bearish. The market settled under the 18-day average of closes, bearish. Resistance now, 1842.20. I think that the pros will look at that and say, okay, that's my resistance, get over 1856.60, and I'll flip my positions around, and then they'll be looking to see if they can get the market up to the 1873.30, 1879.60 moving averages. I want to know where the Bollinger Band fits in. And when I put it on the chart, it ties right in with the 100-day average of closes. So I feel comfortable with that analysis. Now in momentum, momentum's not helping. Momentum often leads the market, and it's not. It's just drifting right here. It's not going up. It's not going down. So I wouldn't be surprised on rallies again if you got back to that 18-day average and played there. Let's assume it breaks down. Then I'm looking at the 1802.80, the lower Bollinger Band, to offer the support. In the gold-silver ratio, silver remains stronger than gold. You can see it's still pointing basically down. It's under the 18-day average of closes, so that gives that better support. The pattern in the silver is interesting here. You have a lower low, you have a higher high. If the market were to take out the high of Thursday, today, and get over 27.35, I think that would give the onus to the bull to say, okay, I'm going to probe the upside. Why? Momentum has been drifting. That might turn it up. You'd have higher lows and a higher high. It would fail if you did that and then you came back and you closed lower on the day. So that, well, actually back under today's low. I won't say lower on the day. That would be the negative on it. So we'll see if that can happen. I would not be surprised to see if there's some buy stops over Thursday's highs. In the copper market, you are just running against the upper Bollinger Band. You got as high as 379.55. You move to the right-hand side, which you so often do. Markets, in futures especially, have a difficult time staying more than 3 to 5 days over an upper Bollinger Band. They often roll back to the right-hand side. If you don't believe me, go count. That is the best way to do it. I'm just telling you what I looked at, okay, over years. So, that is my observation. You will find exceptions. There's always an exception to every rule. But that's the key. The word exception does not mean regular. There is an exception. And playing for exceptions, no. I don't think you build any trading model, technique, discipline on an exception. Higher lows, higher highs. April platinum. You've had how many days over the upper Bollinger Band? 1, 2, 3, 4, As I said, it's hard to get to that fifth. I don't know if you'll get it or not. The upper Bollinger Band number is 1251.80 or 1244.90 right now, rolling over it. But this is an important area. Did we ever get to the point where both numbers of the slow stochastic, excluding today, have been over 80? No. So tonight, which is Friday, early morning trade. Remember, the trade day begins at 5 p.m. Central Time and goes tomorrow to 4 p.m. You get your first day where both numbers are over 80. It's just overbought. Then we come to the palladium market, and in the palladium, you're in an uptrend with higher lows, higher highs, fighting a big battle, and we went over this yesterday, between the 100-day average and support down at the 18. You're overbought, hard to do very much with this chart, but given a nod that the bulls have wrestled control of it, they lose control if the market on this pattern takes out the 2300 level. That day's low, it's a little higher than that, but that would do the job. It would not turn the chart bearish. It would just give it back to neutral. In the dollar index, we broke the other day low enough to take out this low. We're not picking up any momentum, and we're running out in terms of momentum of getting into oversold territory. Any reading under 30 is oversold. Well, one of the numbers is there. So yeah, it could go down to 89.85, the lower band, but more likely it's just going to waffle here now and try to figure out what the next trend in it is going to be. It is out of the uptrend. It is not in a downtrend. That's how I would describe it. You know, our good friends at Modern Trader, they put together profitable trading strategies in any market. It's a pretty bold statement, right? They wrote it, I didn't. And it talks about the basics, how to trade, trend, okay? That's price action trading. I like price action trading. It's another way of saying momentum, things of that nature. Then the flat base pattern. What is it? You hear me give a variation of it all the time when I say the Bollinger Bands have narrowed in and we're going sideways on it. You might want to learn from that. Then caliber and affinity, the American crowfoot, another technique, and 10 rules. We see everybody's got rules to follow, right? There's variations of them, but most of them say the same thing. As you can see, price action trading with graphs. Then you get the base patterns. You see how these work out. They should look somewhat familiar. I did my own variations of them in there. The different rules. Rules are great. You know, they're basic disciplines, and without a discipline, where are you going to go in trading? You're just going to throw your money at the wall and probably not do too well with it. So how do you get this? Go to our website, www.iraepstein.com, bottom right, free offers. Sign up for it. It's right there. I'm Ira. I'll see you tomorrow.